What's up, everybody? This is Sunko, and today is 2022, February 11th. And tonight I'm going to talk about stock again, okay? Happy Friday, by the way. Tonight is the day when you have to celebrate everything because tomorrow is weekend day, so you can get to take a rest, right? Tomorrow, Saturday, and Sunday. So 2 days in a row, you can have a rest, right? Anyway, speaking of stock, these days it's been really, really, really great. I mean, things were all greenish on the charts of um states companies. It's all greenish. Like offshore holdings went up by 12%, and like Paladin Interactive went up by 4%, and Marco Libre went up by 7%. Hmm. Unity Software went up by 7% too. Even Fubo TV went up by 10%. Skills 12, Emphasis 12, Affirm Holdings 14. Hmm. Things are all looking good, right? We can be really positive in terms of trend. Not so much, because I mean, today it doesn't look good. Probably the chart that I just looked at was the chart from yesterday. Yesterday was all look good. But today, it's all rather again. Upstart Holdings is down by 5%. Let's look at the let's look at the chart and see the up and down trend. Hmm. Hmm. It's going up and down continuously. It sure is going to uh give a headache to investors. Well, let's see what we have. The articles. I mean, inflation is out of control, and it may make the Fed trigger happy. U.S. inflation storm prompts these trade ideas to secure returns. You got richer during the pandemic. Early retirement is still risky. Nasdaq jumps 2% as stocks extend rally. Raymond James 2 stock picks with over 70% upside potential. Inflation's on fire and the Fed's poised to act. Here's how markets and the economy have reacted to the first hike in the cycle. The stock market hasn't looked this cheap in nearly 2 years. Inflation is surging. Here are some portfolio changes to consider. US inflation data hits global stocks, lifts benchmark yields. Is Nvidia stock or buy ahead of earnings? This is what you need to know. Global markets, US inflation data hits global stocks, lifts benchmarks yields. Visa had a monopoly on payments at the Olympics for 30 years. China put an end to that. Bargain shopping 3. Strong buy stocks are down over 50%. Brazil's stock market is surging. Don't expect a carnival. Wells Fargo here's best asset to own when inflation strikes. Hedge your portfolio against inflation with these dividend ETFs. Dividend stocks that haven't amid stock market volatility. Goldman sees the Fed hiking 7 times in 2022 instead of 5. Investors score on 5 stocks for 2 straight years and counting. Paladin's new CEO was a CFO, but that trajectory doesn't always work out well. how to profit from your losses on those Cathy Wood stocks. Why hedge fund manager Doe Casey says his bearish case is now stronger and the buyers should buy their time. The Dow is dropping as inflation fears linger, and what else is happening in the stock market today? Stock 5 volatility may remain high, but the stock could bounce back. Getting paid on Venmo or Cash App, there's a tax for that. GN, 4 stocks downgrades are mounting. Auto giants face a troubling trend. Analysts warn 8 falling stocks still have lots to lose. Facebook stock is rising. Today's the day it might end its slides. Okay. First, let's look at this article first, okay? You got richer during the pandemic. Early retirement is risky. Red hot stocks. Real estate convinced many people to start their golden years sooner. People forget that markets go down. If you own stocks or real estate, you're probably richer than you were when the pandemic began. That could put early retirement within reach. Taking such a step is still risky. Many are already taking the plunge. Roughly 4.2 million people left the workforce while the pandemic spread across the country, according to Federal Reserve Bank of St. Louis senior economist Miguel Feria y Castro, and more than 1 in 3 did so partly because of rising portfolio and home values. This helped push the percentage of retirees in the U.S. population to 19.4% as of October 2021, up from 18.3% in early 2020. Greg Kressel decided to retire after being laid off from his job at Hershey's Co. in 2020. The 56-year-old who now lives in Durango, Colorado, said he felt comfortable doing so because the bull market, a rise in his own value, pushed his net worth above his retirement savings goals. I feel guilty saying this, but financially confident is the best thing that have ever happened to me. Mr. Graduate said, moving up a retirement date can be a gamble. People who leave jobs early forfeit the chance to save additional sums and must make their holdings last longer. Some underestimate expenses, including for health insurance before Medicare began. People forget that markets go down, says Sharon Uplander, an advisor in Merrill Lynch Wealth Management Chicago. Given the strong performance of stocks since the pandemic hit, some early retirees may have an exaggerated sense of optimism about future returns. The key in any early retirement decision, according to financial advisors, is to plan carefully. Some advisors suggest dialing back on riskier investments or reducing spending targets to enhance odds of making the money last. I'm probably not as concerned about the long term as I should be, said Mr. Gressel. He said he has seen people die soon after retiring, which really impacted my idea of how much is enough. Having the freedom to do things I won't be able to do 20 years from now. Having the freedom to do things I won't be able to do 20 years from now. Having the freedom to do things I won't be able to do 20 years from now. How much is that worth? Having the freedom to do things I won't be able to do 20 years from now. How much is that worth? Raymond James 2 stock picks with over 70% upside potential. What can it all mean when mega cap stocks and US Treasuries start behaving as if they were penny stocks? Travis McCoy, institutional equity strategist at Raymond James, has an idea about that. We would argue it shows a complete lack of conviction by investors in certain business models and earning power, and the state of the economy overall, McCoy wrote. He's talking of the spell of extreme volatility the markets are currently going through, noting that investors can't make up their minds whether we will see a multi year economic recovery or whether we will soon enter a Fed induced recession. Investor psychology is changing on a weekly or even daily basis, as such, holding on to investment convictions has never been harder or more painful. The sad McCoy adds that sticking to your guns is essential in driving outperformance. Against this backdrop, the analysts at Raymond James have been seeking out stocks that are poised to push ahead in the current environment. They have pinpointed to which they see generating returns of at least 6% this year. Hmm. We ran them through the tip ranks database to see what the rest of the street thinks. It appears the analyst consensus rates both as strong buys. It sees plenty of upside too. Let's take a closer look. Energy sector adds tech energy. The second stock we're looking at is a biotech research firm, ProQR. It's working on new medications to treat a related group of genetic side disorders, the inherited retinal diseases. Okay. I cannot read this unless I subscribe this channel. Three stocks that are down over 50%. Citer Therapeutics. We'll start with an interesting healthcare stock. Enzymia Pharma. Relay Therapeutics. We'll wrap up this list with Relay Therapeutics, a precision medicines company in the clinical stages of research. Industrial Deer, healthcare player Mackin, and consumer directionary Expedia aren't part of a cute acronym, but they're on an even more important role. Their shares are up more than 5% this year already and topped the S&P 500 in each of the past 2 years, says an Investors Business Daily analysis of data from S&P Global Market Intelligence and Market Smith. How to profit from losses on these Cathy Wood stocks. Americans have lost billions of dollars from their retirement funds in the past year as some of the most popular recent investments have come crashing down to earth. As our charts above shows, many of the most popular stocks have been eviscerated. Many are names associated with investors Kathy Wood and the firm ARK Invest, which itself has fallen by more than 50%. The volatility seen over the past few months has sent shares of many newly listed and highly valued companies into a tailspin. It's not uncommon to see stocks showing 3 month losses in the 60% range. The fintech space has been hit particularly hard. Look no further than the performance of Sophie Technologies, which tumbled minus 45% over the past 3 months. Surveying this landscape, Oppenheimer's Dominic Grable expects volatility to continue, although the analysts believe Sophie has a better business combination than our newly listed fintech specific. What does Gary Berry especially like about Sophie then? We think Sophie is one of the most well-rounded developing business models that likely has longevity, he explained. It's the reason we decided to launch on the stock versus other new fintechs offering. Where roots in student financing, the company's business mix includes new consumers acquired via its student Rafi product, not differentiates it against our other upside stocks. Okay, this is it for today, and I'm gonna see you tomorrow. Okay, I'm getting tired. Okay, bye bye.